What is going on, everyone? Welcome back to the channel. This is just a video explaining my rules that I set for myself to follow, and these rules determine whether I have had a good or a bad trading day. If I've followed all these rules and I've won, good trading day. If I've followed all these rules and I've lost, good trading day. The loss is a loss that is expected to happen. Because not every strategy is 100%. So losses where I follow these rules is still a good trading day. Now, a win where I haven't followed these rules is a bad trading day because it's building bad habits, and you don't want to build bad habits because they do not keep you in the game for the long run. And the whole point of trading is longevity and surviving, really. Keeping this going on for a long time. And then if obviously I've lost and I have not followed these rules, it is a losing day because I broke my rules and I paid the price. So that being said, let's jump right into rule number one. I only trade between 9:30 and 11 New York time because that is when market opens, and then I found after 90 minutes I found that typically the setups, the move has been made, and all the confluences you use, like the fair value gap or the order block or the equilibrium, tend to just stop working for me after 11 o'clock. Whenever I've tried to take a trade after 11, it just hasn't worked. It just completely ran through my confluences. So for me, 9:30 a.m. till 11 a.m. and that is it. No time before, because this leads on to point two as well. In my head, right, the S&P and the Nasdaq are made up of US stocks, and the US stock market opens at 9:30. And that's when all the stocks can be traded. That's when people are trading the stocks. That's when market movers are trading 9:30. So why would I trade before that? Rule number two: only use liquidity sweeps after 9:30. Now, this leads on from the last point. The market movers, the way I learnt liquidity, the market movers want to take out people's orders to fill their orders in the opposite direction, right? That's how I learned to trade. That's how I learned what a liquidity sweep was. It was the market movers wanting their massive orders filled, so they'd take out lots of people with orders in the opposite direction. So if the banks are trading at 9:30, like I said in the last point, surely that means only the sweeps after 9:30 are the valid ones. Every time I've used a liquidity sweep from before pre-market, it doesn't work out. So I got rid of that variable from my strategy. The best strategies have the least amount of variables and the least amount of decisions you have to make. If you've got to decide, oh, this sweep pre-market, should I take it, should I not? Get rid of it. It's a decision you do not need to make. Get rid of decisions in your strategy except, boom, should I take the setup? That is it. There shouldn't be questions about the setup itself. The only question should be, should I take this setup? So if you're questioning if this is a sweep before 9:30, should I use it? It's not going to work out. It's not consistent. You know? That's why for me, a rule, only liquidity sweeps after 9:30. No sweep, no trade. That's part two of the rule. If there's no sweep, no trade. I view liquidity sweeps as the catalyst for the move, you know? Highs taken, oh, there's the catalyst. Lows taken, there's the volume, you know? Because it's the market movers moving price where they want it to do. And in order to fill their large orders, they've got to have liquidity swept out. That is why those two rules are so important to me and to my trading. And I can't rack my brain around trading before then. If it works for you, it works for you. I do whatever you want to do. But I just can't wrap my head around it. And number three, in my strategy, I like to see a sweep after 9:30 or a fair value gap hit after 9:30 on the 1 hour or the 4 hour to use that as my catalyst. Because price is doing four things: generating liquidity, seeking liquidity, rebalancing imbalances, or rebalancing equilibrium. I don't use equilibrium as a catalyst. I use liquidity and I use fair value gaps as a catalyst for the move. So if I'm using a fair value gap on the 1 hour or the 4 hour as the catalyst for my move, it must not be interacted with in pre-market, and both indexes must hit it. Sometimes one index takes out liquidity and one fills an imbalance, that's fine. Or vice versa. Or both imbalances, both liquidity. Or if there's one that's hit a fair value gap and one that's hit nothing, not trading. Got to hit something. And I feel like if the imbalances have been interacted with in pre-market or the previous day, it's like it's already been touched and then there's already been volume out of it. It's already been touched, there's already been volume out of it. So I just personally want to see clean imbalances that have not been hit yet for me to use as the step one of my trade. Rule number 1, 2, 3, 4. Do not extend or tighten, take profits, or stop losses. Several times I lost my funded account, the first one, by extending my take profit, losing, getting angry, and button spamming. So, I do not extend take profits to let it go farther. Just don't be greedy. That's being greedy. I do not extend my stop loss to increase my risk because that's putting more risk on. And if I'm not happy with the risk I'm putting on, it's going to lead to pain. And then pain will lead to emotions, and I'll just button spam. Account's gone. And then I do not tighten my take profits, and there's an exception to that. The exception is this rule. We'll get to that in a bit. It's an exception to this rule. But I'm not going to tighten take profits unless it's that rule. Just because when you enter, that's where you think price will reverse. Leave it. And there's no tightening stop losses because your stop loss should be at the point where your trade idea becomes invalid. So how can that change? How can that change? You know? Rule number 5. High quality setups only. I realized last week, the week before that, I don't know when this video will drop, but I realized taking low quality setups in your system is just straight up gambling. Like, come on now. I have this analogy in my head. I'm a banker, right? I'm a banker. And a homeless man walks in and says, I could make you a lot of money. Give me a loan. He could make you a lot of money. Do you know him? Do you trust him? No. Are you going to give him the loan? No. Now, you're a banker. And a guy you've worked with before, really good background, really good history, worked with him before, is in his nice suit, is got his business plan, got everything, and says, I'm going to make you a lot of money. Give me a loan. You'll do it. The homeless man is the low quality setup. Don't take them. They're gambling. Just stop. Just take the high quality setups, guys. Just take the high quality setups. Low quality setups, it's a gamble. It could work out. It could. But is it going to keep you in the game for long enough? No. Those small mistakes, those small low quality setup losses just eat away at your profits. It's not worth it. Rule number 1, 2, 3, 4, 5, 6. Rule number 6. Full 1 minute confirmation. And rule number 7. Enter on candle closes. These go hand in hand, really. After my strategy, the 5-minute retrace, I want to see full 1 minute confirmation, a third confluence on the 1 minute. Just like, right, boom, we've had that 5-minute retrace. We've had the 1 minute. And we have that final 1 minute continuation confluence, like an equilibrium, an imbalance, an order block, and then boom, you're in. And then you only get in when the candle closes. So many times a while ago, I'd get edged, baited by those wicks. Just wait for the candle closes. It's not a good habit to get into, entering off, oh, we push above something or push out of something, and then we don't close out of it, or we don't close above it, or we don't break the structure. Just wait for the close. One of the most important things I learned on like day one of the boot camp from TJR is you make decisions on fully formed candles. Wait for the close. Rule number 8, just wait for the full 5-minute candle retrace. That's something to do with my setup. Just wait for that 5 minutes to close. Rule number 9, if I'm using an imbalance, my stop loss goes at the first of the 3 candles, because it's a 3-candle pattern, the open of the first of the 3 imbalances that I have used. Again, this is what I'm saying about get rid of decisions. If I've used an imbalance, I know exactly where my stop is going, no matter what. And that's, again, another variable I liked to get rid of from my system, from my trading. So it was one less decision to make. I use an imbalance, my stop goes right there. I know it. The open of the first of the 3 candles. Rule number whatever. If the news candle, the 1-minute candle, the 1-minute news candle that drops is massive wicks either side and a small body not showing true direction, and if a few candles after that also just follow the same, or like still are just like chopping up where it started, just don't trade. If news doesn't give a clear direction in the form of right, that's your trade, or that's the liquidity sweep, just don't trade it. News has got to give you that catalyst to either your level or for your trade. If the market doesn't know what it wants to do off news, how are you going to know or position yourself correctly for the market to do what it wants to do? You're not. Another rule, bank holidays, just don't trade. If the banks aren't trading, why are you? Bank holiday, no trade. Simple. And then no news Mondays, no news Tuesdays. If volume's really low, like if you measure the candles and it's like on NQ, normally it's like open moves like a 50 to 70 to 150 ticks. If it was like 5, 20, low volume. ES, it was like candles are like 10 ticks big, 5 ticks big, don't trade. So many no news Mondays and Tuesdays, I've like measured the move, and it's not very big at all. We're obviously we're much more zoomed in on the chart because the candles are a lot smaller in relation to other days. Just don't trade. Just leave it. It's not worth it. There's in unlimited trading days. Just leave it. And bank holidays, if the banks aren't trading, why are you? Next rule, anything over a 1 RR is a good trade, right? You have made back what you've risked. This is a very risk-on job. If you can make back what you've risked, that is a good trade. Don't be greedy, just take profits. If your TP makes sense and it's like 1.01 RR, just take it. Because price could reverse from that point and you could lose what you risked. So, as long as you're making, I think, as long as you're making what you've risked, it's a good trade. Leading on from that, if you have multiple take profits, TP1, TP2, TP3, whatever, I want to take off more than 50% at TP1. If I have 4 contracts, I'll take off 2 or 3. Ideally 3. Should be 3. 3 contracts, 2. 2 contracts, it's got to be 1 and 1. But if you have multiple take profits, more than 50% off. Why? Because it's a risk-on job. You want to make as much money as the market gives it available to you as you can. Right? Simple. And then, next rule, linking on from the last one, your stop, if my stop goes to break even, only when I have taken partial profits. No other time. Just to protect those profits that have been made. That is it. So many times, I have prices ran up quite a lot near my target. It's come back to my entry and I've still hit TP because I do not move my stop to break even until partial profits have been taken. If I have 1 TP, that trade rides to take profit or to stop loss. Simple. Set them, leave them, watch it. You've taken partials, stop a break even. Awesome. And then what I like to do is if the trade has been running for like an hour and a half, I gotta hop off the charts. And if it's already, price is already above or it's below my TP1, my stop goes at TP1, not in profit beneath TP1, it goes at TP1. So it's as if I've taken it all off at TP1 and it's absolutely fine. That happened to me a couple Fridays ago. Friday the 25th of October, that happened. I was in the trade for like an hour and 10 minutes. Price was below TP1. Stop went to TP1. I got stopped out there. All was fine. Bit of news rules now. If there's 10 a.m. news and there's not a setup by 9:55, just wait for the 10 a.m. news. Not worth it. Just wait. Just wait for it. Not worth it. And then if there's 9:45 news, just wait for it. Not worth it. Just wait for it. These are all the rules that I follow. You don't have to follow them. I'm just sharing my rules. Another rule now. Do not voluntarily leave the charts during 9:30 and 11. Just why? Just why? It's like an hour and a half. You know? Obviously, if something bad is happening, you've got no choice but to leave the charts, then fine. My doorbell rang today. There's a parcel. I had to leave for like 2 seconds. Now, here is the rule that this rule overrides a bit this rule. So, if the 9 a.m. candle closes and it makes new 1 hour or 4 hour highs or lows, and I'm already in a trade, and they can be set as a take profit point and is over 1 RR, take it. Just take it. There was one day, I can't remember which day, Friday the 18th of October. If you look at that trade recap, Friday the 18th of October, I was in a trade for a very, very long time, an hour and 36 minutes, because I did not move my take profit. I did not move my take profit, right, to the new highs that were made at 10 a.m. And it hit them. It came back down into drawdown again, but I did hit my original take profit. I did not move it still. I let that trade run. So 18th October, go and watch that if you want to. This is why the rule has been implemented. I did it then. If the 9 a.m. candle closes making new 1 hour or new 4 hour highs or lows, or even if it makes a new imbalance, because you need 3 candles for that, it makes a new imbalance, and it can be set as a TP point, and you're already in the trade, and it's over 1 RR, just take it. It's not worth beating yourself up about. Quick rule now, check both indexes always, just so you know that they're both saying the same confluences, because if one is respecting bullish confluences and one is just absolutely ripping the shit out of them, they're correlated, right? One in like 20 days, they go opposite ways. If one is respecting bearish confluences and one isn't even making bearish confluences, it's giving you bullish signs, why would you trade if they're saying opposite things? And then another quick rule, I implemented this a long time ago. Don't chart things against what you are looking for. If highs have been swept after 9:30, you know you're looking for shorts. Why would you chart anything that could give you a long, like an equilibrium from a low to a high? That gives you longs. But you're looking for shorts. Same if a low has been swept, you know you are looking for fucking longs. Why would you chart something that give you shorts? Another quick rule, detached from the outcome, just like don't care about any monetary value. Care about positioning yourself in the right place to take the right trade. Simple. Build good habits. It's a process. And as I've said before, build satisfaction from building good habits. Train yourself to get satisfaction from building the good habits, because I've had 2 no trading days this week and 1 away from the charts day. I don't know when this video will come out, but the week of Halloween, I've already had 2 no trading days and 1 away from the charts day, because I've been practicing my good habits. I built good habits of only taking a setup when it's my setup and it's on the screen, right? And now my capital is being protected. because I have built these good habits, and I'm getting satisfaction from not trading because it's a good habit that I've got into. And final rule, it's in bold because it really annoys me, this one. If I've decided that price action looks horrible, it looks like fingernails, there's like massive wicks either way, no imbalances, or piano keys, it's just like bricks. And I've said to myself, there's nothing on the 1 minute, price action's really bad. The rule, just step away. Just step away. Just log out your broker. You can still watch it, still get the reps in of watching the chart, but just log out your broker. It's not worth taking a trade. You've said it's really bad because this rule is in here because every time I decided it's bad, I end up taking a trade. I always lose. And then I say, oh, I even said it as well. Oh, I said it was bad, but I took a trade. Just step away. There's always another trading day. It's not worth it. You will lose. All of these rules, if you break it, it's just not worth it. So that is why I've written this and I'm making this video now. As you can see in the top, if I deviate from these rules, I lose regardless of the outcome. And if I haven't deviated from these rules, I win regardless of the outcome. That is so far all the trading rules that I follow every day in the market. And since having these rules, it's not a step-by-step sort of thing. I hate having a step-by-step thing. It feels too restrictive. But these rules have helped me a lot. And I suggest you make your own list of rules to not deviate from. And if you deviate, you've lost. And if you've won, no, if you haven't deviated, you've won. These rules to me are the most important part of my trading. I also have above my desk a piece of paper on the wall that reads, observe and react. There's always another trading day. Do not spam buttons. You blew a funded and a combine. Do not over risk. I lost 4% in 2 days on my first funded. How? Do not overtrade. You will lose. You're an observer. Just react. No expectations. They lead to emotions. No emotions. You can't have emotions in this. You'll just mess it all up. No trades is still a winning position. That is a really important one because you have not lost anything. So you still won. It's still a winning position. You haven't lost. So no trades is still a winning position. 1 day will not fix it. Just submit to the process. Just let it happen. You're not going to wake up 1 day profitable. It's got to happen. It's got to just happen. You got to just do the right stuff. The market gives you the opportunity. Don't go looking for it. Let your setup come to you. Can't emphasize that enough. If you are efficient, you have good habits, you are patient, you have a vision where you want to be, you have that drive, and you give it time, you will achieve your goals. And the last one is just being aware and zooming out. Be aware of what you're doing. Look at yourself from a third-person perspective, and if you think, what the hell is that guy doing? You're doing something wrong. I'll put a picture of that piece of paper on my screen, just so you can see it. Just, if you follow the rules, right, and you have a profitable edge, what is stopping you? Why not you? Why can't you be profitable? You know? That is why I have these rules, and I follow them every day. And it's working out so far. So yeah. That being said, guys, that's the rules that I follow. So I get a lot of comments saying, "Oh, why didn't you use this sweep?" Or "Why didn't you do that?" Or "Why didn't you do this?" I'm like, "'Cause I follow my rules, and these are the rules. I follow them." So I hope that video was useful. Go make your own rules and then just follow them. It's that simple, folks. It is that simple. That being said, guys, I will catch you all in the next one. Appreciate all of you. Like, subscribe, comment, share with your friends, whatever you want. Appreciate it, guys. Peace out.